there are entities who use the cash basis of accounting on which they are not really aware of. So one examples are those who are classified as micro entities, as well as those who are in the small and medium-sized entities. I told you that they are not really aware that they are using cash basis of accounting because they don't have any accounting background, and they just record income and expenses only when cash is received or when cash is paid. So that's why it's called cash basis accounting. And unlike for the accrual basis of accounting, revenue is recognized when it is earned, regardless of whether it is collected. And then expense is recognized when it is incurred, regardless of whether it is being paid. So from cash basis to accrual basis, we need to make some adjustments, of course, because most of the transactions are through cash transactions only, through the cash books. However, there are events or transactions that are still recordable but not yet recorded because it is not captured by the cash book. So we need to make adjustments. So normally, what are those transactions that require adjustment? So we have accruals, deferrals, and then the bid groups. So for the accruals, we have the accrued income and then the accrued expenses. Accrued income is normally an income that you earned but not yet received. The cash is not yet received, while the accrued expense, it is an expense already incurred, but cash is not yet paid. For the deferral, we have the prepaid expenses, and then we have the unearned revenue. So for the prepaid expenses, it is an expense already been paid, but it is not yet incurred, so it is considered as a current asset. Well, for the unearned revenue, it is a cash already received, however, the related income is not yet earned, so it is now classified as a current liability in the financial statements. Then we also have the bid groups. So B stands for bad debts, I stands for inventory, and then D stands for depreciation. So immediately after, we require to have adjusting entries when we change from cash basis of accounting to accrual basis of accounting. We already have a fairly presented financial statements. And then for the following year, we need to make some reversing entries. Although it is not required, it is optional. But for me, I consider it as a good practice to have a reversing entries at the beginning of the year in order to have a good records. So it's very easy for us to have a good accounting records if we do have a reversing entry. So we need to identify first what are those adjustments or adjusting entries that require to have a reversing entries the following year. So first of all the adjusting entries listed previously are the accruals. All accruals, we need to reverse entries at the beginning of the following year. Uh, in the accruals, we have the accrued income and then the accrued expenses. For the deferrals, we need to reverse entries for only for those transactions that we recorded at nominal accounts. Like for example, in the prepaid expense, if we are using expense method, and then for the unearned income, if we are using income method. So we need to reverse the entries we have adjusted at the end of the year, then reverse it subsequently the following year. For the bid groups, we are not required, or there is no need to reverse the entries because it is already fairly stated. There's no need to require for a reversing entry. So why do we need reversing entries? Actually, we are using reversing entries for consistency purposes because there are certain transactions which we apply a certain method. Like for example, in prepaid expense. If we record it with our accounting policy using expense method at the beginning of the year, and then at the end of the year, we need to reflect the remaining portion of the unused prepayments. Then from the expense method, we are reflecting the asset method. So it defeats the purpose of the consistency principle. So at the beginning of the year, we will reverse the adjustments we've made because we reflected the asset. So the following year, it will be reversed. Then we are as if we are continuing the expense method for the prepayments or the prepaid expense. So that's one for the consistency purposes. The other one is for voluminous transactions because it is very hard for us to check I mean, adjustments based on the previous adjustments if there is a volume of transactions, particularly for one line item. But with the help of reversing entries, there is no need to check the related amount based on the previous adjustments we've made. We just need to continue to record it as if there is no adjustments made at the beginning of the year, at the end of the year. So that's the reason why we need to have reversing entries.